Welcome to the Real P&L Trading Show, where I share my P&L on 3 accounts and share my proprietary safe wheel strategy for free. Please type in the chat that you can hear me okay. I want to make sure everyone can hear me. And be sure to post any questions you might have before, the sooner the better, because sometimes I end the broadcast and you can't, you don't get the question in because we're probably on about a 2 or 3 or 5 second delay. Okay, so you guys are telling me my audio is good. Thank you. I appreciate that. All right, let's get into what is going on. So the Premier, let's talk about, first I'm going to talk about the Earnings Edge and the Premier Level 5, then the Safe Wheel. So Earnings Edge, you can see all the trades that I've made this year. You can see overall up around 1,800 bucks. The P&L is 10,891. Now, the big question is, what did I trade last week? And let's go here to the Earnings Edge. And the answer is I didn't trade anything because there was not a lot of things coming into earnings. And so typically when we're in earnings season, there's a lot to choose from. And when there isn't, there's hardly anything that fits through the filters. So the last one I did was CrowdStrike, where I made 560. You can see my, since I did my update, you can see my record 30, 20, and 8, 60% win rate, win about 700 on average, 700, losses about 580. So these are kind of getting close to each other, but my win rate's higher, winning higher than 50%, so that's okay. You can see what happened in 2022, where I vastly outperformed the market by about 80%. And then in 2023, underperformed by about 7. And what are we trading today? What is SPY? I think we're up, right? 562.59. Oh yeah, up pretty good from the last time I put that in. Okay, so the market is up 18% this year, and it's up about 18% since the beginning of 2022. And the Earnings Edge is up 118% since that time frame. Let me make sure this is the correct 10,891. Let's make sure that's the correct number in there. 10,891. So since I've been trading this in the beginning of 2022, I'm up approximately 118%. Now there is more risk with this trade, this Earnings Edge. It has a lot more risk than just holding the S&P. So on a risk-adjusted basis, you know, this is a little extreme here, but those are the numbers for the Earnings Edge. Now, the Premier Level 5 Pro, let's talk about that. On the Premier Level 5 Pro, I started on July. We kind of reset the account on July 16th, 2024, because I wanted to do the S&P variant. And so I started with $30,000. And let's see what the account is worth. We'll look at that. When I got in, the SPY was trading at 563.28. So the S&P is pretty much at break even. So when I got in 2 months ago, the market is basically the same level as when I got in, and it was at all-time highs. So I guess we're probably close to all-time highs right now. Now let's see what the account's doing. Can't show the complete account because then it'll show my account number. Unfortunately, you know, these accounts aren't set up to do live streams and not show your account number, right? All right, so 3740 is my account balance. 3740. So outperforming the S&P by about 2.5%. That's good. That's the goal of this variant, using the PL5 Pro to outperform the S&P, and that's what I am doing over a 2-month period, up over about 2.5% above it. Okay, so that is the Premier Level 5 Pro. Let's talk about the Safe Wheel. What's good about the Safe Wheel is so far it's outperforming the S&P 500 over time, but also I have about 1/2 the drawdown, so better risk-adjusted return. And let's see how we're doing with the account. see what the account balance is on this one. This account here, I believe, 6158. You can see I was in JD. We'll get into the details of that in a minute once I go through the spreadsheet. 6158, 6158. Up a little bit since last week. It's down this year. Didn't do much last year. Outperformed by 40% in 2022. So when you have a grind down market, this thing performs really well. Bull market looks like it doesn't perform as well in a bull market. We'll see. I mean, so far, it hasn't. Up 23% versus 18, so still outperforming. But the thing is, risk adjusted, it's only got about half the drawdowns. So on a risk adjusted basis, vastly, outperforming, because you can pretty much double this number here. That's what I like, risk adjusted returns. All right, what's going to go on here? Well, I was trading JD. Last week, I owned 200 shares. I did a blaze of glory trade. In other words, I sold as much premium as I possibly could at the money, and I got called away. And on Friday, I sold my put hedge. I didn't want to hold that over the weekend and come in today and maybe it would be down a lot or whatever. So I got rid of that. So I was clear over the weekend. I had no positions. And currently I have coming in on Monday, I have no positions. Okay. So what am I going to do? I'm going to create a new position. Now I could go back with JD, and that's what I normally would do. But because of the accounting wash rule, which I kind of should have taken into account in the past, but I didn't, but I'm taking that into account now. I don't want to get back into JD right away because then I can't really write off my losses. So I'm not going to get into JD. So I had to pick another account and another stock, and I decided to go with Pins. And the reason why I went with Pins were, let me tell you. Bear with me here. I will tell you why did I go with Pins. Well, the first thing was Pins was close to $30. So that's kind of my first criteria. The second one is to make sure that it has enough liquidity. Then I want to make sure it has enough premium available. And then after that, I want to make sure there's no earnings coming up. And then I check my put hedge to make sure that my put hedge cost isn't crazy high, over $4.50, which it's not. And then I check my strike availability for my put hedge, right? Because I want to have strikes available, and Pins fit the bill. So what I'm going to do first is buy that put hedge. Okay, so I'm going to go Pins here, trade tab, put hedge. I want to get 150 DTE or close to 150 as I can. So I'm going to go here into the 150. And where am I going to buy this? What strike? I want to do about 80% of 29.08. So let's see if I can pull up this. So about $29, about 80% of $29, about 23. So I want it to be above 23. So I'm going to go with the 24 strike. This is the one I'm going to choose. It's not above $4.50, so it's not super expensive, so it's good. I'm going to buy 3 of these. If I have between $5,000 and $10,000, so I'm going to do 3. If I had between 10 and 15,000, I would buy 6. If I had between 15 and 20,000, I would buy 9, and so on. So I'm going to buy 3 of these. Get my put hedge going. Looks like the mid is 138. I'll go in at 138. I don't want to play around here. Let me make sure I'm in the right account, because you always want to do that. So I've got many accounts, and sometimes I'll make a trade in the wrong account. That's not something I like to do. Okay. So 139. Just pushing away a little bit. Of course, the algorithm will pick up that I want to buy it. So then it'll probably make me pay a little bit more. And that's what happened there. Okay, now I have my put hedge, and now I need to buy my long call. I need to protect this put hedge, so I'm going to buy a long call. I'm going to do it the cheapest way I can, which is in the expiration that happens this week, and I'm going to get a call that's around $5. So this is probably the one here, the 3150. I might be able to get it for $5. I'm going to buy one call. It expires at the end of the week. It's just there to protect my put hedge. So let's see. Okay, got filled there. Okay, so now I've got my puts. I've got my protection in order. Now I'm going to just run the traditional regular wheel at this point. So I'm going to be in the nearest expiration. The way I run the traditional regular wheel is I go in the expiration that's going to expire. Today's Monday, that it expires on Friday. And then I'm going to go in and sell a put out of the money, but I want to get at least 29 cents for it. I could go to the 28.50 and then back one, but that's kind of at the money. So I'm going to stay out of the money, and I'm going to sell this 128.50. Mid is 33. So I'm going to collect $33. I'm just going to do one contract. I talked about the sizing, and now I have my position on, and it's protected, and it's the safe wheel. Okay, let's see if there's any questions. I probably will have some questions today, considering I opened up a new, I got into a new position. So let's see here. Shovel was the first one here. What's up, Shovel? Some guy, here we go. Sound 5x5. I'm assuming my sound is working. I appreciate that. Less is more telling me all is good on the audio. Steve-O, good audio. Yeah, I'm using a different microphone, the one here on my chest, because the other one gives me problems. Unfortunately, that's the expensive one that gives me problems, but it is what it is. Okay. Jonas, I had the same JD position last Friday. My 200 shares did not get called away until the market closed, so I let the call positions expire, the long call, okay? But today my 200 shares did get called away. Should I sell the put hedge? Yes, that's what I would do. I would sell that put hedge, get out of there, because if you go back into JD, you're going to have that stupid tax wash rule thing where they're not going to give you, if you took a loss on the shares, you're not going to be able to write that off if you get back in within 30 days. So yes, I would sell that put hedge. I anticipated that on Friday, so I sold my put hedge on Friday. And Avery says, Jonos, yes, sell it off and pick a new stock. Yes, Avery's. Obviously, you guys know who Avery is, right? That's my daughter, and she helps me with this business. So she actually takes care of the safe wheel. I don't really look into the safe wheel too much. She understands the safe wheel really well, and she actually put together the course for the safe wheel, so she knows it really well. Okay, Jonos, I have another stock, but I'm also going to pick the same stock as Carl. Yeah, you can do that, or you can pick another stock. There's other stocks available that would work. I went through quite a few of them. I liked pins, but there's some other ones there that will fit. Yeah, Avery's talking about avoiding that wash rule, right? We want to be able to take those losses on our taxes. So what is the wash rule? So again, the wash rule is if you take a loss on a stock, you can't buy it again within 30 days, because if you do, they're not going to let you take that loss on the stock. PLTR. Yeah, the thing about PLTR is that it has a high volatility. And what I've found is that typically the ones with super high volatility, they'll kick out of range, that $20 to $40 range. They'll kick out of range in like 3 days or a week, and then you got to pick another stock. So that's one of the reasons why I don't like those high flyers. Jono, so it looks like with pins, the IV is not 60 to 100%. Yeah, I don't use that metric anymore, the 60 to 100% IV. I pick the metric of how much premium can I get out of the money, and if I can get more than 1%, for example, more than 29 cents for the pins, and I'm out of the money, then I'll say that that is enough volatility or for the stock to bring in enough premium. So I don't use the 60 to 80% rule anymore for picking my stocks. Less is more. What is the rule for the put hedge price of an active position? Should the put hedge need to be above or below the current price times 70% or 75? 70, right? So you're right there, 70%. So if it's 69% away or 65% away, I will roll that put hedge closer to the actual price and I'll move it to 80% of it. So yes, 70% is the number there. Okay, Jono says, thanks, Avery. You know, I want to ask you guys a question, a very simple question, and I want you to type it in the chat. What do you think are the top two characteristics of a successful trader? What are the top two characteristics of a successful trader? Type in the chat and let me see what you guys say about that. Very interested to get your opinion on that. What is a successful trader? What are the top two characteristics? Type in the chat there. Yeah, because I'm always interested in what you guys have to say. And that is it's an interesting thing. I think there's a lot of people that think that successful trading is a lot of different things. And I'm just curious to know what you guys think. So type in there. Okay. Jono says risk adjustment and patience. Less is more, says discipline. Well, what is the ultimate thing that you want to occur? Okay, I think I'm trying to be a little more clear. If you're successful, what does that mean? What have you done? Will says patience, discipline, and consistency. Persistence follows a plan rather than emotion. Unemotional, okay. Unemotional and consistent. Okay, I guess that if you were to go back in time and you were to look at someone who was successful, what would you say they accomplished? Answer that question. What did they accomplish if they were successful? Some guy says consistent approach and a strategy that you know works well. Will says safe. Avery says understanding the long game. Rich, protect against risk. Now we're getting somewhere here. Jono says financial freedom. Do you guys want to know what I think? I think if you were a successful trader, I think this is the answer that I totally would go with. Profitable, right? I mean, I think all the things that you guys are saying, you're assuming profitable is already in there. Steve-O says, didn't get wiped out. Zoli, education plus consistent gain with low drawdowns, right? But wouldn't one of those characteristics be this? Profitable? I mean, that's just kind of obvious. I think it's so obvious that you guys just kind of went over it and talked about things around it, right? But yeah. Let's see what less is more. The people I know that claim success really aren't because they won't show me their P&L. LOL. Yeah, exactly. So it's about being profitable, right? You're not really going to be a successful trader if you're not that one thing, profitable. And beat the S&P. Yeah, definitely beating the S&P to me is like a superpower that you can't 95% of hedge funds can't do it. They can't just beat the S&P, especially not on a risk-adjusted basis. Scott said made money. Yes, totally agree with that. And Shovel said first again. I'm not sure why. But yeah, for me, if I were to look back and see whether someone was a successful trader or not, first question I would ask is, are they profitable? Right? Profitable would allow some lucky guys into the table. That's okay. I mean, uh, successful needs to happen over a period of time. Yeah, there's some luck that could happen in there, 1 or 2 years, maybe even three. But I mean, you start going back 4, 5, 6, 7 years, luck is kind of going to be thrown out the table there. It's thrown off the table. Okay, and Avery says she's second. All right, now I'm going to. So, for me, it's profitability. That's what I care about. That's the characteristic that I care about. Obviously, risk-adjusted returns are very important, right? You can't just be profitable and almost blow out your account 3 times over the year and then come out ahead. Like, that's not what I'm talking about. Less is more says, thank you again for the great discussion. Everyone hit that like button. I'd appreciate it if you guys hit that like button. Okay, that is all for today. One thing I like to say in parting, if the P&L is not real, what else are they trying to conceal? I'll be back next week, and I appreciate you guys.